Well, thank you, Mark, for the introduction. Good morning, everyone. It's truly an honor to be here to kick off today's CEO Investor Forum because, just as the CECP believes that business should be a force for good in society, I believe that investing too can and should be a force for good in society, and so I'm happy to be a part of this. Sustainable investing, that's my preferred term. Maybe today we should call it purpose-driven investing. I think is really about investors starting to reject the short-term, quarter-by-quarter orientation that's predominated over the last several decades, and instead taking this longer view that investments and investing itself should be long-term oriented, and thereby giving companies that they invest in the space to do the same. When your investor base increasingly is interested in the long term, it makes it easier for companies to do the same. So I'm here today to tell you what I think is the good news, that more and more investors agree with me. In fact, I see really a huge wave building towards more purpose-driven investing, sustainable, responsible, impact, ESG investing. There's a lot of terms that are used, but I think it's a wave that's still building and that's only going to get bigger in the coming years. For one thing, asset managers are incorporating sustainability and purpose into their investment processes. Now, you've probably seen this slide before. You're probably familiar with the principles for responsible investing. But, this is an interesting trend. 2006, PRI launched with, I think it was about 60 signatories, $6 trillion in assets controlled by those signatories. It was an initiative asking asset managers and asset owners to commit to the incorporation of ESG into their investment process. Well, by 2018, the PRI was at 2,000 signatories. It's more today, and those signatories control more than $80 trillion in assets. Virtually every asset manager of any significance in the world today has signed on to the principles. At first, the principles were considered sort of an aspirational type of a thing. In more recent years, there's greater requirements for companies to report on their progress, and so I think it's really been certainly a positive impetus to the increase in this type of investing. But also, we're seeing, I think, more and more PRI signatories taking that very serious step of incorporating ESG into their investment processes. Now, I'm from Morningstar, so we have to delve into some of our mutual fund data, but you can see this trend also within the mutual funds world. I think this is very interesting. Asset managers are starting to add ESG considerations to the prospectuses of funds that are otherwise conventional funds, that are not ESG-focused funds. They haven't really changed the rest of their investment process in a very significant way, but they've added by prospectus ESG. I noticed this trend starting in 2017. In 2018, more than 60 funds did this, and then just in the first quarter of 2019, more than 70 funds added ESG to their prospectus, their legal documentation. And I've had a couple of asset managers tell me since that time that they expect their entire range of strategies, all equity, all fixed income, mutual funds, to add ESG criteria over the course of this year. So another, I think, very interesting trend. Well, why is this all happening? I think most of you have probably agree with this, but I think it's very interesting to say that as asset managers have said in this Morgan Stanley Bloomberg study that was just out, I think this February, 82% of asset managers said that they thought strong ESG practices could lead to higher profitability. I talk to asset managers, on a regular basis about this, and while some of them, in fact, perhaps many of them still today are struggling at some level with exactly how to incorporate ESG throughout their investment process, I think on the whole they're recognizing that incorporating ESG in a systematic way can improve their investment process and returns. They're not going to bother with it if they don't believe that. So in addition to incorporating it into the investment process, we also notice that more and more asset managers are starting to realize that shareholder engagement is important, and even more public advocacy around certain issues can help create long-term value for both investors and society. So in this same survey, 43% of asset managers said they had ramped up their shareholder engagement efforts as they pertain to ESG issues. What this says to me is that asset managers, are really acknowledging and realizing the fact that public companies, all companies really, but public companies in particular, face a growing set of expectations for better corporate behavior from a range of stakeholders, starting with their customers and clients, continuing with their employees, both current and prospective, including the communities that they do business in. Global companies have obviously operations all around the world. And increasingly, the public at large has these growing expectations as well. What does better corporate behavior relate to? Well, all these issues that we call ESG issues, environmental issues, including climate-related issues, the use of natural resources in an era of increasing scarcity, issues having to do with human capital, having to do with your supply chain, having to do with making safe and useful products, and how product packaging is recycled and disposed of, protecting privacy. That's a big one that's becoming more and more important. And on the governance side, issues like executive compensation, both the levels of executive comp and the incentives surrounding it, board capacity to address sustainability issues, and transparency around lobbying political activities. These are the kinds of issues that the growing set of expectations relate to. In addition, these expectations, I think, are reinforced by the massive amounts of data that can now be collected, accessed, and acted on. Any issues that arise, or even particular anecdotal type stories about a corporation behaving badly, can be quickly amplified via internet and social media, so that consumers and employers and the general public and traditional media and policy experts and regulators, as well as investors, have ready access to all this kind of information about corporate behavior that they never had before. And so companies that are not addressing their sustainability challenges face increased risks and missed opportunities. Those that act in more positive, purposeful ways can retain and grow their customer base. They can reduce risk. They can operate more efficiently. They can draw from a larger pool of talented workers, work with stakeholders to address how to minimize negative externalities and create and grow positive ones. And this is all to the benefit of a firm's reputation and brand. So asset managers today, I think, increasingly understand these dynamics and therefore are taking steps to assure that they can account for them and analyze them in their investment process. There's also a lot of demand growing out there to invest this way. There's certainly high levels of interest in sustainable investing, more among end investors and asset owners. And increasingly, that interest is turning into actual investments. I think because of two things. One is the greater availability of funds and other types of investment products, but including low-cost ETFs, which enables investors to align their interest in ESG-type investing with low-cost passive investing. And also because intermediaries are starting to get a better handle on it. But first, let's look at the interest level. We continually see high levels of interest in more purposeful investing. These are some studies that are sort of hot off the presses. I think the Nuveen study on the left is just from late 2018. And in it, 81% of respondents said they want their investments to make a positive impact on environmental sustainability. 80% say they want their investments that their investments should try to make a positive impact on society, both up from the initial survey taken 3 years earlier, which was also a very high number, a high level of respondents answering in the affirmative. The Allianz Life study was just put out a couple of weeks ago, and there's several things listed here, but I thought the most interesting one was that 80% said that they, quote unquote, love the idea of investing in companies that care about the same issues they do, and also that investing in good corporate citizens makes strong financial sense. Our own decision sciences team at Morningstar has developed a tool that helps investors and their advisors understand sort of how much they value sustainability in an investment context. So using this tool, the investor is asked to sort of theoretically allocate money to a series of paired stocks based on the stock's return characteristics and the company's sustainability profile. And then a sustainability preference score is calculated based on their answers. They ran this on 1,000 investors to sort of test the results and see what the outcome was. And overall, 72% incorporated sustainability into their investment decisions. That's the three rightmost columns on the chart. And the middle column is one where the respondents sort of balanced sustainability with return, and the ones farther to the right actually had even more sustainability preference that they showed in the test than preference for return. So very high levels of interest. And also interesting about this study, while millennials and women were more sustainably minded than younger generation and men, the differences were generally not that significant. So, the lesson for financial intermediaries is don't write off older people and men as being automatically uninterested in investing for sustainability and purpose. Well, we're already starting to see the interest turning into actual investments. This is from the Global Sustainable Investment Review 2018. It's just also been published, and I put a number of these things in the slides so you could go back and take a look at them yourself if you're interested. But it shows that globally estimated $30.7 trillion is invested in some form of sustainable investing. I think in the US it's about 18 trillion of that. Interestingly, according to this study, about 25% of the assets are now in retail assets, and that's one area that's sort of lagged behind. This has been more of an institutional investor-focused area, but I think we're starting to see intermediaries embrace sustainability more so than they have in the past. This is back to funds, and this is what Mark referred to earlier. These are the monthly estimated ESG flows to mutual funds that have ESG or impact focus, not just the ones that have sort of added a line in their prospectus, but not just 5 Globe funds that according to our rating system, but like ESG focused funds. They've set records for flows for 3 years running, but in the most recent quarter, those 3 bars on the right, they set an all-time record for both quarterly and monthly flows. We've also had an enormous amount of new ESG fund launches just in the last 4 years, so this bodes well. The lighter green are ETFs, as I mentioned earlier, that are helping investors align their interests with their interest in passive investing. Advisors are becoming more willing to talk about sustainable investing. In the Nuveen study, 36% said yes, they're currently offering responsible investments. That's the term Nuveen uses, up from 29% in the previous. And more interesting on the right, 51% now said they're willing to proactively discuss it with a client, up from 41% just last year. And only 40% say, no, I just wait for them to bring it up. I'm kind of afraid to talk about it unless they bring it up. 40% still say that, but that's down from 48% last year. So intermediaries are starting, I think, to get on board. And then finally, I just want to talk about the trend towards impact. This was already alluded to. These are the Sustainable Development Goals. I think there's a real trend building towards this idea of impact, that investing can make a difference not only in the way corporations are run, and that investors can help encourage more purposeful corporate behavior in a kind of long-term strategic sense, but like let's focus it around the framework that the SDGs provide, really talking about the big picture societal problems that are out there that need to be addressed, and how sustainable investing and how a long-term corporate focus can align with actually solving some of the world's most intractable problems. There's been a lot of fund launches that are focused on impact just in recent years as well. So there's more interest out there in impact investing. It's very resonant with investors, the term. And then finally, I just want to point this out. I think this is very interesting. We're starting to see, if you haven't noticed, quite a lot of discussion, big picture discussion taking place out there about the future of global capitalism itself. Several books have been put out just in the last year by noted economists, including a Nobel Prize winner that was just published last week. We have investors like Ray Dalio and Jeremy Grantham weighing in on the topic as well. And basically the essence of these arguments is that, capitalism needs to change. It has to shift, some would say, shift back to a broader focus on stakeholders and on long-term sustainability in order to meet the demands of more people and the planet. So those are the three big trends that I think we're seeing that form a wave in favor of sustainable investing, more asset managers incorporating ESG into their investment process, more investors turning their interest into more purpose-driven investing, into actual investments, and this sort of trend towards impact and the public philosophy about how we understand and define global capitalism itself changing, shifting towards a version that will hopefully work better for more people on the planet. And that means moving towards an expectation that companies serve a positive purpose and that they manage themselves with a long-term perspective that takes into account all relevant stakeholders, and an expectation that investing too should be aligned with positive purpose in order to help bring it about. And so that is really what CECP is about, and forums like this one are important steps, I think, towards a more purposeful capitalism. So thank you very much, and have a nice rest of the day.